subject of this panel is the $1 trillion investment opportunity in education. And so I think given AI seems to be the big buzz everywhere, and we all saw Chegg's announcement yesterday, which was great, I think I'll start off with just a quick question for the panelists. Is AI the $1 trillion investment opportunity in education? And if not, what is that opportunity? Mercedes, I'll start with you.
Hi. Yeah, just quick intro. I'm Mercedes Bent. I'm an investor at Lightspeed. We're an $18 million fund doing a lot of investments into seed through late stage growth. I focus a lot on EdTech, FinTech, and Latin America. And, okay, big question. The $1 trillion question, I always think in terms of EdTech. We already have a $1 trillion company, actually, in EdTech. It's YouTube. It is Google. It's a place where you can go to learn anything and everything you want. I was not raised in the era of high school with YouTube, but many people were, and I think that when I talk to people in that generation, that's their number one source. So will AI help it? Certainly. It's a tool that's going to help content creation happen even faster and cheaper at scale. So I don't know if there's going to be a company that we will say that is the AI company, but there will certainly be a $1 trillion education company that's enabled by AI.
Agreed. Hi, I'm Aileen Lee with Cowboy Ventures. I'm a seed stage investor. So usually, and we just invest in the US. I happen to invest in a bunch of kind of EdTech-ish companies, more focused on adult learners. And I don't know, I don't know when we came up with the topic of $1 trillion companies, the markets might have been in a different situation than they currently are. I think now probably all of us would be very happy to have like a $100 billion company.
10 billion.
But I certainly think, yeah, 10 billion, even $1 billion would be nice. But I certainly think, well, I'm sure we'll talk a lot about AI as kind of the reason why a lot of new companies will be built, and it will displace a lot of older business processes and a lot of older products and software. So it's going to create the window for a whole bunch of new stuff to be built.
Hi guys, my name is Connie Chan. I'm a general partner at Andreessen Horowitz, where I oversee our consumer sector for everything seed and Series A. The question around whether AI can be a $1 trillion opportunity, I think AI is massively transformational, and so the fact that so many of the panels today have been talking about AI, I think is a good thing and absolutely warranted. And I think AI will impact education not only in how we learn and how we're personalizing education or making education more effective or efficient, but I also think it's going to change the job landscape dramatically in 10 years. And so there's a lot of reskilling that has to be done for the adult labor force. There's a complete rethink of all curriculum for K through 12 and college education that has to be done, because there's all these new skill sets that we're going to have to learn, and all these skill sets that we are learning that are going to be obsolete. So there's going to be a new huge wave, I think, of value creation, because what we're teaching in schools right now is not going to adequately prepare students for the future.
Hi, everyone. I'm Rebecca Kaden. I'm a partner at Union Square Ventures. We're a dominantly early stage seed and Series A venture firm based in New York. The portfolio is relatively global. In education, we're a generalist firm. We invest in network-driven businesses. In education in particular, our focus has been on direct-to-learner businesses. I definitely echo, I think AI will be transformational here. The way I think about it is no matter what you want to learn, whether it's K-12 or reskilling or lifelong education, one-to-one instruction has a lot of evidence to be the most effective way to learn it. And the reason we don't do it more is a cost issue. And AI may be the single most transformative thing for that, where it's driving that cost down eventually towards zero. In the short term, it actually might spike the cost, but over the long term, it can really asymptote that down, and that should open up huge opportunities in how learning across the spectrum happens in the most effective way. And I think that will create a lot of opportunities for everyone.
Hey everybody, my name is Arun Agarwal. I'm an investor at TPG. I'm actually a very late stage investor, so unlike the rest of these folks, I get to see if companies have momentum before I get involved.
Ours have momentum.
I think actually I share a lot of thoughts with the other panelists here. I fundamentally view education as a supply-constrained market. I think there's no shortage of people who want to learn, students who want to learn in the K through 12 world, adults who want to learn new skills, and ultimately, we just have tons of supply problems. We have teacher supply problems. In adults who want to learn, we have content supply problems, and so I don't know that it's AI is quote unquote the $1 trillion opportunity, but I think particularly the current generation of AI we're in, of generative AI, and some of the comments other folks made about it driving down the cost of content creation, we're seeing our companies, be it companies like Kajabi that allows people to make online courses for other people to consume. Companies like that are using AI to really make it way easier, where if you've got a passion you want to teach people, getting going and generating that content. And then similarly, we have other companies that are serving the K through 12 space that are saying, how can we use AI to take a lot of the mundane tasks that being a teacher involves that's not teaching students and automate those. And so I see it as really something that can enable the supply side of a supply constrained market. And that's actually how I'm thinking about sort of playing the space.
Great answers. So there were some people who talked about content costs coming way down because of AI. Do you think the $1 trillion opportunity is maybe a value creation, and i.e. revenue that's generated from new products from AI, or is it more likely that costs are coming out of the system from the efficiencies provided by AI? Mercedes?
I think within, there's a couple of different areas, but I think within education, if you think about, and also when I say education, I'm referring to adult workforce, career mobility, all of that as well. I think that initially, we're going to see a lot of the opportunities in the cost savings side as people improve their workflows, their work streams. We're investors in a number of companies, Forage, Handshake, Byju's, that are already using it to decrease content cost. And so we're certainly seeing that impact now. In the future, where there might be revenue opportunities where people start to go into new creation types. You think about, there's lots of opportunities that take a lot of time to create today. If you think about video content, it's not often produced by the average person. It's not a skill that I would say I have at all, video stitching and editing and styling. And that is something that if you can enable more people to do that, it becomes a common skill as easy as Word document processing, emailing, then you can start to see a lot of revenue creation opportunities because so many more people are doing it and able to sell it.
No, I totally agree with that. I think it's going to enable a lot of creativity, and it's going to drive a lot of revenue. People are going to be buying different products, and so it will shift. And obviously, hopefully, it will grow markets. Just kind of like to your YouTube example, right? Like YouTube as a market did not exist 2-3 decades ago. TikTok didn't exist a decade ago. And so I think how people, like, what are the forms of kind of consumption of both, of entertainment in particular, but all kinds of content, like the forms will change based on the tools that are built by new companies, and that will shift enormous amounts of revenue in the future as well.
And these don't even have to be expensive, big ticket purchases, right? They don't necessarily even mean you're buying this full-on package for a tutoring service. It could be. But I mean, like, I imagine like a bunch of you in the audience have tried these Avatar Lensa type apps, right? And you've paid a couple dollars for them. Imagine how much money you might spend sprucing up your PowerPoint presentation or doing an extra style or grammar check on your essays. Those dollars will add up if every student is applying that kind of microtransaction thinking.
Yeah, I also think after a time where a lot of the value has accrued to tooling effectively and to that content creation, we are going to enter a time where there's differentiation through user experience and where the content creation piece gets kind of handed off, and how that meets that learner, whoever that learner is in whatever stage, how that is packaged and how it's experienced is the opportunity. And you've seen that. That's not totally new, right? A company like Duolingo is an example there. But I think we're going to see a boom in new forms of user experience that match that utility with fun and innovation that can kind of re-spark that.
Yeah, I tend to agree with Eileen's comment that whenever you have something so disruptive, I think the two things, Steve, to your question are intertwined a little bit. I think it's going to drive a lot of cost savings, but I think it's also to such an extent that it's going to sort of open up giant new markets and create new revenue opportunities. You know, an analogy would be when you think about something like Uber, right? Operating in a city like San Francisco where there isn't a subway and, you know, is relatively difficult to get around. There's sort of a, hey, you can now move around cheaper, but then there's sort of what are the second, third, and fourth order effects of actually having much more ubiquitous transportation and mobility. And no one would ever attribute, you know, all the offsprings of economic growth to one company like that, or Uber and Lyft, whatever you want to say, the ride-sharing movement. But when you think holistically, when you've taken that much friction out of a system, you get really interesting new revenue opportunities, be it new restaurants that arrive or new opportunities for people in one part of town to send their kids to another part of town. So it's really hard to pinpoint down, but I think it's disruptive enough you're going to see both.
Yeah, and you know what I'd add is one thing we saw in the enterprise that I think will have a lot of parallels in education is when the iPhone came out and people got used to the interface of the mobile design on the iPhone, then they went to work and they had like all these horrible janky interfaces and they were like, why do I have to work with all these horrible products when I get to use this amazing productivity tool in my personal life every day? And so it created a window of opportunity for new software to be bought into the enterprise that had new interfaces and had new modalities that basically matched the iPhone UX. And I think as our kids grow up with things like Roblox or like TikTok and all these things, like then they're going to go to school and they're going to be like, I have to do it in this old way that people have been doing it for 100 years when all the other interfaces I interact with are completely different. And I think the same thing in the workforce. So I think it's going to create a lot of opportunity because we're going to have to bring up to speed user experience and the personalization, because in the future, like in gaming, people are going to have personalized games that are really going to be like choose your own adventure based on their own interests because the software is going to be at that place. And so I think from a learning perspective, it's going to create a real opportunity to bring up the level of sophistication and personalization of those user experiences.
I just wanted to add one thought to this like second, third, fourth order effect thing. I heard an analogy the other day that I thought was really great, which is you can think of AI almost like electricity. And yes, PG&E will make a lot of money from our usage of electricity, but it's because we have electricity that all of this other stuff can happen. And so it's going to enable tons of other new business models, new user behaviors, things that just were completely impossible beforehand, and change in just like everyday lifestyle. And multiple people will benefit from that, multiple companies.
I told them if they weren't interactive, I was going to ask a difficult question about would you rather invest in OpenAI or Elon Musk's new AI venture? So, well done. I won't ask the question. Lifelong learning is something that is the next question on, is that the next trillion-dollar area? It's obviously gone through a lot of change recently during COVID and post-COVID. What are your thoughts there?
Yeah, I'm happy to start. COVID was definitely, I think, both on the supply side and demand side, a real watershed moment for lifelong learning. All of a sudden, you had a very large number of people who found themselves with extra spare time, and they thought it was an opportunity to turn that time into, you know, we saw in our portfolio developing interesting courses and sharing their passions. It wasn't always learning in the, like learning calculus. It was things like learning how to cook or, you know, learning how to make a sprinkler out of a hose for your kids to play in the backyard. And so there was just this sort of wealth of people creating kind of interesting things. And likewise, you had a bunch of people who wanted to go learn interesting new stuff. And so that was something we absolutely saw. And I think it's a trend that's really stuck. And, you know, I think we'll continue to see, as I mentioned in sort of my opening comments, to me, it's all about the supply side. I think that there's always thirst to learn. I think people want to learn. It's how do you curate and find the content. That's always been the challenge.
Yeah, I think lifelong learning is potentially one of the bigger opportunities here. Learning has been bundled, right, towards, you know, forward-weighted in someone's life and bundled both geographically, cost-wise. But if you take away the barriers, you know, what are the barriers? Their cost, their accessibility, and their reason to do it. And all of those are evolving really, really quickly. And as that happens, I think learning has a chance to become much more fluid through someone's life. And you're seeing that matched with career and job motivation that's evolving in a completely different way. And so you pair those together, and I think that's totally transformational to what the role learning has in someone's life versus what it has traditionally played.
I might actually push on the supply constraint part on EdTech, actually, because I agree with Mercedes. Like, YouTube is my teacher for all my lifelong learning things, whether it's cooking, fixing a toilet, singing, whatever it is. Like,
but do you think it's a great teacher?
YouTube. When I can find the right video and the right creator, it can be great. It can be absolutely
It could be better.
Great. It could be better, but it's not bad. I guess what I'm saying. And so I actually think in learning there's also like a motivational issue. That's why if you have cohort-based learning or if you have classmates or a TA equivalent of some kind, you generally get higher completion rates. But I think actually like the near-term more like critical piece of lifelong learning is going to happen when we see job disruption. That's to me is like inevitable in the next several years. There's going to be a bunch of people who went to grad school for a certain job, and the number of those people that will need to be hired is going to be far fewer than they expected. And so the reskilling opportunity to me is really absolutely needed, and also a very large dollar opportunity, because many of the people who are going through a reskill process are willing to give up a portion of their first year earnings. And so that's easily thousands of dollars per student.
Another thing is I've thought that, you know, AI, somebody asked me, where do you think it's going to impact? And I definitely think it's closer to the lifelong learning. I mean, it might be controversial, but I don't think the K-5 experience is going to change that much due to AI. It's primarily socialization, interpersonal learning, being able to interact with students and peers in person, and also learn the fundamentals. Now, if we ever get to personalized learning, which we will get to, but one day, with a robot that's able to fully speak to you and guide you through every single step that you would want to learn right after that, I still think there would be something missing in the psychological development for children and brain development, so we do need to think about that. But in lifelong learning with adults who have, you know, fully been kind of up to speed, I think the areas we're going to see really is how does prompt engineering, which is already a new role, start to change how we think about our roles. I am pretty bad, admittedly, in using ChatGPT in my job today, and I'm starting to view that as a deficiency because there's other VCs out there using it. I don't know what they're using it for, writing memos or research or diligence, but I do think this is something every role is going to have to think about in order to scale yourself, because that's the hardest thing to do, and that's what the lifelong journey with AI will be, is scaling yourself through it.
Learning some interesting things about our panelists here. Mercedes is not good with ChatGPT, and Connie has apparently fixed a toilet after looking at YouTube. I've never done that, so I'm impressed.
I just like to use it to make up stories about my husband.
There we go. Rebecca, you the other day made a comment about AI, or you asked a question, is AI, just to come back to that for a minute, can that have an impact on the teacher shortages in K-12? I think that's a really interesting idea, because I agree with Mercedes that probably higher ed is more impacted by AI than K-12. Why don't you talk, Rebecca, just about your comment there, because I think it's a really interesting one.
Yeah, I mean, the biggest problem today, in my understanding, facing the K-12 system is a teacher constraint, right? And so you think about AI from that perspective, and my hypothesis is it comes into play really in two places. There are certain subjects that lend itself really well to being taught directly to students through AI. Languages may be the best one to start with, but there are going to be others. And so you have an interesting situation where on one hand, I think AI will really give teachers efficiency, which is going to be the second thing. And on the other, there are certain places where it might be a replacement, which we have to really think about how that plays into the system. On the efficiency side, in our dream state, right, we would want every teacher to be as focused as possible on the moments that they're interacting with the student. And we'd want to put as much cost from the system as possible into that experience, because that's what every parent wants, and that's what we believe is going to create learning outcomes. In practice, much of the cost through the system and much of the time is not spent on that, right? It's spent on curriculum design and and logistics and grading and all those kind of things. And I think when you bucket those tasks and really look through them, AI is going to be massively helpful in them. And we're already seeing it in some online schools we're a part of, that it's dramatically cutting the cost that it takes per student to educate. And at that point, perhaps you can redirect some of those savings to the teachers and be able to expand that workforce and retain them in a different way. And I'm not sure that we're so far from doing that, and I think that could be an exciting opportunity.
So we're seeing that. I think the impact on K through 12 is going to be profound for the very reasons Rebecca is saying. And it's being a teacher is like a lot of things that are not teaching, right? And it's even a lot of things that aren't teaching related, like grading papers. It's things like filling out forms and just doing all sorts of stuff you don't want to do, right? That has nothing to do with your kids or making your kids more educated or better people. And so, one of our company's presidents is definitely thinking really hard about all the things. It focuses on speech therapy and for K through 12, so it's a little bit different of an angle, but it's all related. And just the amount of things a speech therapist has to do working in a K through 12 setting that has nothing to do with speech therapy is amazing. If you could automate all that away, I think it would be very, very profound on the labor supply.
Yeah, and just to clarify, the lower years, like K through 3, K through 5, that's where I'm talking about. I don't know that it will be drastically different. The grading requirements, the lesson preparation requirements, actually they're similar, but definitely some of the grading requirements are a lot lower. And so I do think it'll impact different parts of K through 12 very differently. By the time a student has the conscious awareness to be able to be a self-directed learner and really take themselves through that journey, that's when I definitely think that will change. And that you can argue when that starts, but I think there's a much higher propensity of that middle school, high school onward.
Another interesting story I heard recently was about a startup that claims to have such great curriculum and feedback to that curriculum that you can have a PE teacher teach computer science. You can have a history teacher teach computer science. And so there might be something around the utilization of our teacher workforce to cover more subjects.
Yeah. I think one thing I'd add is, we talk about like prompt engineering and all this other kind of stuff, right? Which is pretty white collar opportunities, right? And I think when you asked about lifelong learning, I think historically our system has had windows of you need to kind of get on the train and like complete high school, right? And then it gives you certain job opportunities, or like in terms of a path to the middle class or economic mobility. Like we had a more rigid education system and a system of learning in our country. And I'm hopeful that also the advances in broadband accessibility and the technology will maybe break down some of those systemic barriers so that there are a lot more on-ramps to be able to get access to skills and training at different points, at more frequent points in your life, so that no matter what age you are, you actually will have access to be able to learn and get educated and get skills to be on a path to a better economic future. So I think that's going to be an important part of how we try and leverage this technology in the future. And I'm hopeful that actually there'll be some giant companies that are built in that way, not just for the highest skill workers.
I'm going to give you the opportunity for a shameless plug for your portfolio. Talk about the company you were telling me about the other day that I said, you're telling me my 80-year-old dad can go online and actually
learn so something? we're investors. We work with a company called Get Set Up, which is, and kind of when we're talking about I think that there are going to be a lot of companies built to address very specific needs and very specific populations. So I don't actually believe there's necessarily going to be one monolithic trillion-dollar company that does this, but there are going to be a lot of successful companies that are worth a lot, whether it's for people with learning differences. Get Set Up basically as a live, interactive environment for older adults to be able to participate in live online classes, whether it's like Sit and Fit or language learning. And we work with another company called Co-Rise that teaches technical skills to adult professionals. And they've built an AI-based product called Nudgy. And Nudgy basically nudges you. So it knows exactly where you are on the course, and it knows when you logged in last and how long it took you to do this certain problem set, and it can basically nudge you and say, Connie, I noticed that you had a harder time with this section of the homework. Mercedes was really good at that homework. do you want to ask a friend? And then it will nudge Mercedes and be like, Mercedes, I noticed that you were really good at this section. Could you help your classmate? And the teacher doesn't have to have a part of that at all. And it's all automatic. So that's an example of, I think, how these products are actually going to help automate in a lot of ways, like what Rebecca was saying, like taking some of the burden off of the teacher and creating more pathways for people to get that education.
Go ahead.
Yeah, a lot of folks have, talked about AI as something that can help break the inspiration kind of block that folks have. And if you think about applying this, we're seeing examples in our portfolio. We have a company, Forge, that helps students look at how they can learn about careers in order to get into new opportunities that they wouldn't have known about otherwise. And they're using AI from a career coach perspective. And that, if you think about the career journey and searching for jobs, it's often, the motivation problem. How do I get the next step? What's the next level? And that can be your inspiration kind of enabler to push you to have that person in your corner who's constantly guiding you towards the next step in your career journey. We also see this with another portfolio company, Genie Book, Southeast Asia company that is helping assessments and homework help for K-12. And they're teaching younger children, kind of the middle age, to help, here is a way that you can prompt, in order to actually memorize something, why don't we create an image for you that is unique to what you are interested in? It's the same thing I used to do, like a mnemonic memory thing, where I'm like, okay, I have a bear over here, and it's in this journey in Florida, and I don't know, I'm memorizing something in history, and it will help you create the image for you, and then you actually have that. So there's a lot of cool applications to break that motivation.
Awesome. Different topic. Mental health is something that we talk about, maybe not as much as we should in this country. Is there a $1 trillion opportunity or a big opportunity to address mental health in EdTech? I'll throw it out. Go ahead, Arun.
I certainly believe so. I mean, education is a large industry. Healthcare is a tremendously large industry. And so if you want to talk about $1 trillion opportunities, I think we're only now entering an era where people think of mental health, and particularly as it relates to children and the role the education system has in helping kids, with mental health issues. It's only starting to emerge, and so I think it's a tremendously large opportunity, and I think it's something that we have to think about as a problem that the education system needs to take on.
Mental health is a very wide spectrum. You have teenage girls who are facing depression. You have the rise of ADHD in a lot of young boys, especially in K through 12, K through 5 especially. I think I heard crazy stats around, it's like over 10% of boys in elementary school are medicated for ADHD. And they're either on Adderall or on Ritalin that both have significant side effects. And so one, I think schools are taking a more active role and parents are taking a more active role in diagnosing this because there's more awareness. And two, for whatever reason, there's just a true rise in the number of diagnosed students with ADHD. And there are proven technologies that supposedly help students with ADHD manage their symptoms. There's a game on the iPad you can play right now. It's like an adventure game, and you can only unlock it with a physician's prescription. The physician's prescription gives you a code that you can use to play this video game, and you play this game for 20 minutes at a time for 4 weeks straight, and it's supposed to help you figure out how to focus better. So I think there's actually a lot more technology and also research that can be done for mental health for kids.
We're also investors in a company called Daybreak Health that is working with the K-12 public school system to treat mental health and depression. They work with the schools on a subscription basis to serve a lot of the students, and then they've partnered with insurance and healthcare providers to continue to pay for the ongoing journey. And so in terms of how does we reach $1 trillion opportunities, it's a lot of times I think about combining education and another field that has even bigger budgets, to be frank. A lot of times in K-12 we worry about the opportunity size to monetize from the school. Parents and consumer pay is another question. But really thinking through how do we combine. I'm an investor in another business that's an EdTech plus FinTech, where they're working with private schools. They give them the LMS, learning management system. This one's called FIDU. It's in Latin America. And they also have a student information system, and then they also have a tuition receivables product. And so if the hundreds of billions of dollars of tuition revenue are going through their platform and they can get a cut of that, they can give away the software for almost free. And that really helps the schools out a lot who don't have to figure out how to pay for it.
Yeah, I think Mercedes' point about how education's intersecting with other industry there, healthcare is a good example, but I think that also relates to the supply constraint, because the same supply constraint education is feeling is being felt in a bunch of different categories, and I think that's creating this surge, particularly in lifelong learning, of embedded learning. And we've just exited at this time of a lot of embedded fintech. And I think what we're seeing is a lot of embedded learning kind of appear too, where categories that have structured supply constraint take it on to create that supply. And so learning intersects with these categories that we may associate as having different budgets.
No, it's along the same lines.
Okay, I'll switch topics. So let's just take a hypothetical. Well, the markets have shifted pretty dramatically over the last 12 to 18 months. Talk to the audience about, you have a portfolio company that thought it was chasing that $1 trillion opportunity or $100 billion opportunity. How do you talk to your portfolio companies these days, the management teams, about the trade-off of growth versus profitability and spending money in light of the fact that the funding environment is pretty rough right now?
I think the answer is it depends. I mean, if it's a company that's selling directly to parents and such, like I counsel them to focus on unit economics. And I think a lot of VCs are trying to get their companies to extend their runway, make sure you have at least 1 year, ideally longer. And that means you can chase a lower growth rate, and that's okay, as long as you're doing a contribution margin positive. But I will say I think there are exceptions in the sense that if you're selling directly to schools, we have this magical thing right now from COVID called ESSER, which will expire in September 2024, and schools will lose it if they don't spend it. So you have like $100 billion that needs to be allocated in a very short period of time. And so companies selling to schools, they should be guns blazing, trying to close as many sales as they can, because that budget will go away. So I think it really depends on the type of EdTech company, the business model, for them to think about how do you balance out changing CAC dollars with growth rate.
Great. Anyone else?
So we work with a number of companies that sell to enterprise around learning. And enterprise budgets this year, and I anticipate next year, are going to be really tough. And so if you are selling to businesses, you have to really think closely about what businesses you have been selling to and what businesses you're going to sell to in the future. Because I do anticipate both that the fundraising environment will continue to be pretty tough, and that multiples will probably stay where they are, if not get a little bit worse for the rest of the year. So putting off a fundraise if you can, and trying not to raise this year, like Connie said, is ideal, but not to expect that things are not really going to be much better next year. And that, people have to, it's like there's like a mourning period. You have to go through like the stages of grief, I think, to kind of get your head to the new place where, no, my company is not going to be worth 50 times revenues, that I will be happy if my company is worth 10 times revenues.
Yeah, the flat round is the celebration this year for some companies. We did an analysis where we were looking at specifically to the question of growth and profitability. There's obviously like high growth, high profitability, highest revenue multiple, low growth, low profitability, low revenue multiple. And then in between, we saw a very clear flip in 2022 where it used to be higher growth, lower profitability, had a higher revenue multiple, and that changed last year. And now they're close, they're not super far apart, but we have this line kind of tracking every month. And that means now, exactly what Connie's saying, it's okay to go slower and go for profitability, and investors will not, totally penalize you for that. You do also still need to be default investable. And so one thing I worry a little bit about is coming out of this cycle, which could be 2024, and our investors get amnesia sometimes pretty quickly. And are we going to look at the past growth rate of 2x for a couple of companies and maybe go, oh, that wasn't fast enough? Hopefully not, but investing is unfortunately sometimes emotion driven and very here and now driven.
Yeah, I have a lot of thoughts on this, but I mean, I would say there's some of this is like a late stage, early stage thing. I mean, I think for a lot of the companies that we're talking about, they have what I call interim financing risk, and they have to be a lot more responsive to the current funding environment because they could have to do really dilutive financings or might have impossible financing scenarios if they don't manage their burn. In the late stage in the public markets, I think it's actually more mechanical than people think. Interest rates go up. That means if you're going to defer cash flows for a long time, companies are going to be worth less today. And it actually tracks kind of the 10-year treasury yields a lot more logically than people might think. So if you don't have interim financing risk, where you might have to do a round in the middle, it's kind of just like, yeah, your multiples are lower, but they're lower because interest rates are higher. It kind of all ties together. And frankly, these companies were never able to just grow as never making money. It was just that it was okay for that to be further out in a zero interest rate environment. And so I don't really know that how you should run a company is really that different if you don't have this interim financing risk problem. Growth is, even in today's market, more valuable than profitability. Like I think a lot of people have talked about, things are more correlated to Rule of 40, like growth plus cash flow margin versus growth. But if you run like a multi-factor regression, growth is still twice as valuable as profitability. And I think there's a lot of noise in the public markets, frankly, because I think a lot of public market investors just don't know if some companies that went public can ever be profitable. And so there's a quick signal of, hey, if they're profitable today and they're still growing, it's probably a good business. But if you have high confidence that, to some of the comments the other folks made, that your unit economics work, and you're putting good money into the ground, I'd tell you to grow as fast as possible. You just need to be mindful of the fact that if you raise it 50 times revenue, you might not be able to again. But if you can avoid the interim financing problem or have some other financing solution to avoid that, I don't really think you should be changing fundamentally how you run a good business, which is solid unit economics at the fastest growth rate possible.
Especially if you're selling to schools, like you really should grow as fast as you can.
How do you define unit economics? Is it still LTV to CAC?
I think the problem is, and I can poke fun at the venture market a bit. I think there was a bit of like whatever metric the next round investors focused on, companies got really good at hyper presenting. So for a while it was LTV to CAC. So all of a sudden like people had the most. It was the same way in private equity. It was like, oh, people like EBITDA. Let's just keep adjusting EBITDA. And then in the growth market, it became LTV to CAC. And so it was like, how do we adjust this and adjust that and do ratably put our marketing costs. And then for enterprise companies, it was net retention. And so you got funkier and funkier calculations. So I think it's about like intellectually, honestly, not picking a metric, but actually really understanding what's going on and actually running your business in a way where it actually is profitable. And it's not, hey, this doesn't show up in our LTV to CAC because to do a bunch of custom features, we hired 10 engineers and that's an R&D and nobody's got their eye on the R&D budget, and really thinking really, really hard about the actual economics of your business. And that muscle and that discipline has been lost because it's not something the public markets were as focused on, and therefore the private market wasn't as focused on. And if there's one thing you learn, it's management teams often respond to their incentives. And so if it's not something that's you're getting paid to worry about, it gets worried about less. So in some ways, this environment is going to be healthy in that we're going to get back to saying we got to run businesses to eventually generate cash flows, because that's what businesses are supposed to do.
How long do you, and this wasn't on script, how long do you each think that it will be in this environment? Any predictions?
I think it's very, there's not an economist among us, so that is hard to predict, but in our perspective at our firm, it's better to be conservative than not. I think safely assuming through 2024 is probably wise. I think, banking on that a fundraising environment is going to be meaningfully different next year than this feels a little bit more as a hope and a prayer than a foundational exercise, so better to be conservative.
One thing I have seen companies do is try and pivot or add AI to their business, and that instantly makes it more attractive to investors.
Wait, you think it works?
For the pivots, when they completely redo the product, sometimes, yeah. I've seen companies like build...
What about when they just change their website to .ai?
Yeah, that doesn't work. That doesn't work. But if you're early on, or if there's like a smart way where it can fit into your business, it does make more investors take notice.
Yeah. I think you just have to actually have thought it through, and it has to be real. Like we're getting a lot of pitches. Like I'd say 2 years ago, there was a lot of people who slapped like on the blockchain on their business model, and now we're getting a lot of pitches of people who are adding AI. But when you actually ask them about like what is it, and did you train it, and like where did you get the data, and they can't answer the questions, then it basically just like debilitates the conversation because it has no credibility.
Well, yeah, you can't fake it, but like if you can make it.
With that, we're over time. Thank you very much to all of our panelists. Really appreciate it.